Welcome, curious minds, to another deep dive. Today, we're cutting through the noise around Li Auto's Q2 2025 earnings call. Our mission is really to distill the most critical insights, give you the shortcuts to understand what truly matters for this, well, evolving EV giant.
It really was a fascinating call. You see a company navigating some, significant headwinds in a super competitive market,
Right.
but also making these ambitious strategic shifts. And despite some of those headline misses, the market reaction tells a pretty interesting story we should unpack.
Absolutely. We're going to kick things off with just a quick snapshot of the Q2 results.
Okay.
Then take a full deep dive into the financials, management strategy that pivot their product roadmap, and what all these big investments in AI and even their own chips really mean for investors.
And we have that special segment at the end, too.
Oh, yeah. Can't forget that. Our This Is Not Financial Advice segment, where we'll pitch an outrageous but maybe plausible trade idea for Li Auto.
Looking forward to that one.
Okay, let's jump straight into the numbers for Q2 2025 then. Looking at the core earnings, GAAP diluted EPS, that's the standard accounting, came in at a little over 14 cents per ADS.
Okay.
But non-GAAP, which, often gives a clearer operational picture, was a little over 19 cents per ADS.
And both missed.
Both missed, yeah, by about 5 cents compared to consensus estimates.
Right. And revenue.
Revenue stood at $4.24 billion. That's RMB 30.25 billion. Also fell short of what analysts expected, which was around $4.46 billion.
So year over year, that's
Down 4.5% year over year, yes. But interestingly, up 16.7% compared to the previous quarter, Q1.
okay. So some sequential growth there. And deliveries.
Deliveries showed, modest growth. 111,074 vehicles. That's up just 2.3% year over year.
Okay. So headline numbers a bit soft, but what's truly notable, I think, despite these misses, is that the company kept up some solid profitability.
Yeah. Tell us about the margins.
Well, they reported a gross margin of 20.1%, and the vehicle margin specifically was 19.4%. That actually saw a 70 basis point improvement year over year.
70 basis points, so 0.7% bump. That's pretty good in this environment.
Exactly. It really highlights their sharp focus on cost optimization. Very resilient, even in this challenging price war situation.
Okay, but what about cash flow? Was that positive?
No, free cash flow is actually negative RMB 3.84 billion.
Oof.
But they do have a really robust liquidity position.
Right.
They're sitting on RMB 106.9 billion in cash and investments as of the end of June.
Wow. Okay. That's a significant war chest, as you said. Plenty of cushion there.
Definitely. But looking ahead, the Q3 guidance was, notably cautious.
How cautious?
Deliveries projected between only 90,000 and 95,000 vehicles. That implies a significant year-over-year decline. We're talking 41% to 38% down.
Wow, that's a big drop. And revenue guidance.
Following suit. Expected between RMB 24.8 billion and RMB 26.2 billion, roughly $3.5 to $3.7 billion US, also implying a substantial year-over-year drop. So clear signal of near-term headwinds.
So given these, kind of soft numbers, that cautious guidance, how did the market react? Because that's often the interesting part.
Right. Well, shares were initially down pre-market, like you'd expect.
Sure.
But then they rebounded. Closed up 2.9% at $23.26 on the day.
So complex sentiment then. Investors maybe looked past the immediate figures. Why do you think that happened? Let's try and unpack that.
Yeah, let's dig in.
So that year-over-year revenue decline you mentioned, management attributed it mainly to lower average selling prices, right?
Exactly. And it wasn't just one thing. It was kind of a combination, product mix changes, customer interest subsidies they were offering, higher sales incentives.
All happening against that backdrop of the really aggressive China EV price war.
Precisely. And what's fascinating here is how they still managed to protect their margins amid all that intense competition.
How did they do it?
Management really hammered home cost optimization and operational efficiency. They said those were the key drivers.
Okay.
And that strategic focus let them keep that healthy 20.1% gross margin. And they're promising to keep it around 19% for Q3, even with the lower sales volumes they're forecasting.
That's crucial. Demonstrates they can manage profitability even when sales are under pressure.
It really is.
And that strong margin protection, it brings us right to their strategic pivot, doesn't it? Li Auto, traditionally strong in ERVs, extended range electric vehicles.
Yeah, the ones with the small gas engine generator.
Right. They're now aggressively shifting towards a pure battery electric vehicle, or BEV, lineup. That's a huge gamble, isn't it? What's driving such a big change?
It's absolutely a massive pivot. You could argue maybe a necessary one in this evolving EV market. They've dominated that ERV niche.
For sure.
But the market's clearly shifting towards pure BEVs now. Their first big step into that territory, the Li Mega Home minivan, launched back in April.
Right, the big one.
Yeah, it's actually exceeding expectations.
Yeah.
Selling around 3,000 units a month, became the top-selling EV over 500,000 RMB since June.
Okay, so the Mega's doing well. What about their established models?
Well, their refreshed Li L series, those are the established ERVs. They did see some sales fluctuations in June and July. July deliveries were down almost 40% year over year.
Ouch. Why?
Management put it down to sales and service system adjustments and, other market factors. Suggests they're still finding their footing, smoothing out the kinks in this transition.
So a bit of a mixed bag on current products, but definitely a clear commitment to BEVs. We also saw the new Li i8 BEV launched in July, started deliveries in August.
And they tweaked that one quickly, didn't they?
Yeah, interestingly, they relaunched it on August 5th. Simplified trims, different pricing, trying to better meet market demand.
Okay.
That's pretty fast iteration.
Very fast. And they expect cumulative i8 deliveries to hit over 8,000 units by end of September, aiming for 10,000 eventually.
There's more coming, right? The i6.
That's right. A new Li i6 BEV. It's meant to be a competitive, large, 5-seater SUV. Unique design, lots of space, long range, and featuring their advanced VLA driver tech, targeted for launch at the end of September.
So it's a real full-court press on BEVs then?
Absolutely. And this aggressive BEV transition, it absolutely needs strong support infrastructure.
Charging, you mean?
Exactly. That's why Li Auto is investing heavily in its charging network. They already operate the largest network among automakers in China.
How big are we talking?
Over 3,100 stations, more than 17,000 charging stalls. And they have an ambitious goal, 4,000 stations by the end of this year.
Wow. Are they fast chargers?
Critically, yes. Over 61% of these are what they call 4C and 5C ultra-fast chargers.
4C, 5C. What does that mean for the driver?
It means they can charge the vehicle much, much faster. Think 4 to 5 times the battery capacity in an hour. It's a huge advantage for BEV users. Really cuts down on range anxiety.
Okay, for all the talk about EV sales and charging, it feels like the real battleground, maybe the long-term one, is in the tech underneath.
Mm-hmm. The software and intelligence.
Right. And I'm seeing Li Auto is making a truly massive bet on AI this year. Over 6 billion RMB. What are they actually building that costs that much? What are the key innovations?
That's a great question, because this is where they're really trying to differentiate themselves. They're not just talking about it. They officially rolled out their own proprietary VLA large model driver, and this thing called the Vangu agent with i8 BEV.
VLA.
Vision Language Action. It marks the industry's first VLA architecture actually delivered in production vehicles. This driver large model, it has 4 billion parameters. It integrates spatial awareness from the cameras with linguistic understanding.
So it understands the world and what you're saying.
Kind of. Think of it like giving the car not just eyes, but a brain that truly comprehends spoken commands and nuanced situations. Better perception, reasoning, decision-making, and more natural language interaction.
It's a much smarter driving assist.
Mm-hmm.
And they're rolling this out quickly.
Very quickly. This VLA driver is scheduled to be deployed on all their ADMAC models. That's their advanced driver assistance and smart cockpit system via over-the-air updates by mid-September.
Mid-September, that's soon.
Yeah. And they're even claiming performance improvements comparable to the leap from, say, ChatGPT 3.5 to 4.0.
That's a bold comparison.
It is. And beyond just the driver, there's the Vangu agent. That's powered by their own MindGPT large language model. It's evolved into an intelligent agent that can expand in-car services like connecting to food delivery apps or making parking payments automatically.
So creating a really smart, connected car experience.
Exactly.
And their ambitions go even further, don't they? I saw notes about level 4 autonomous driving by 2027 and achieving 10 times human driving safety within 2 years. That sounds ambitious.
Audacious goals, absolutely. The key they mention is using a world model.
Real model.
Yeah, it's a cutting-edge AI concept. The system builds this comprehensive internal simulation of the real world. It allows it to predict outcomes and learn from iterative training, sort of like how our brains learn through experience.
Okay, so using simulation to train faster and better.
Right. They believe this approach is key to getting that exponential jump in safety and eventually reaching level 4 autonomy where the car drives itself under certain conditions.
And what's particularly interesting, I thought, was their move to design their own silicon, their own chips.
Yes, that's huge. They successfully taped out an in-house designed chip early this year. It's currently undergoing in-vehicle testing.
And the performance claims are pretty wild.
They are. claiming twice the performance for large language models and 3 times for vision models compared to existing powerful chips.
Wow.
They're talking about a novel data flow architecture and true hardware-software co-design. Basically, they're building the chip specifically for their AI algorithms, not just using off-the-shelf stuff.
Like building a custom highway for their data instead of using city streets.
That's a great analogy. This tailored approach, they believe, delivers that massive performance boost needed for processing all the data for advanced AI and vision crucial for those level 4 goals.
And this chip could be in cars soon.
Expected deployment in flagship models next year.
Okay, so huge tech push. But it's coupled with organizational changes too, right? They reorganized the sales team in August.
Yes, a major reorg. Move to a flatter structure. Headquarters now directly manages 23 provincial regions.
Why do that now? Reacting to the sales dips.
Management presented it as largely proactive, a strategic move to better align with what's happening on the front line, strengthen their direct sales model, and just enhance overall efficiency.
Makes sense. Faster reaction times.
Right. And empowering their sales experts more directly with competitive pay and growth opportunities, optimizing the human side to match the tech roadmap.
And then there's the global strategy. Looking beyond China.
Yeah, ambitious plans there too. 2025 is the initial year for that push. They've set up R&D centers in Germany and the US, building overseas sales and after-sales organizations.
Wow. And all products launching in 2026 will apparently account for global regulations from the start. Focus seems to be on the Middle East, Central Asia, and Europe for the initial go-to-market.
That is a massive undertaking, on top of the BEV pivot and the AI development.
It is indeed. Speaks volumes about their long-term aspirations. Expanding globally, like that tests everything, R&D, understanding local markets, building service networks. It's a multi-year marathon.
Okay, so let's try and tie this all together. What does this whole complex picture, the misses, the pivot, the tech bets, the global plans, what does it mean for you, the listener, as an investor?
Right.
Despite the Q2 misses and that weak Q3 guidance, we saw that post-call relief rally in the stock. It suggests there's some underlying confidence in Li Auto's long-term vision, maybe their ability to execute this really complex pivot. But is that optimism justified? Or just relief?
That is the million-dollar question, isn't it? Or maybe the 106.9 billion RMB question, given their cash pile.
Good point. That substantial cash provides critical liquidity, gives them options. It's crucial funding for the aggressive R&D in AI and chips, the BEV, product development, building out charging and retail networks, both at home and abroad.
So the market's betting they can put that capital to work effectively?
It seems that way. The market might be looking past the near-term pain.
Okay. So the shift from EREVs to a BEV-heavy lineup, plus all that added software and compute content from the AI and chip investments, that seems like the key credibility test for investors now.
Absolutely.
Near-term headwinds are obvious, the price war. Those sales system adjustments are hurting performance now. But the company is positioning itself for a future where advanced intelligence and a diverse product portfolio drive the growth.
And it's worth remembering where the stock was before the call. The trailing returns were pretty rough, down 17.5% over 1 month, down over 20% over 3 months leading into the call.
While the market was generally up.
Exactly. So that rebound after the earnings, despite the numbers, suggests the market might be looking past the immediate issues, looking towards the potential of these aggressive strategic moves, especially if management's right about their speed of iteration outpacing competitors. It's definitely a high-stakes game.
All right, high stakes indeed. Which brings us nicely to our This Is Not Financial Advice segment. Time to pitch an outrageous but plausible trade idea for Li Auto.
Okay, let's do it. Given Li Auto's volatility, that big strategic pivot, and the market's kind of confusing reaction, my pitch is something called a synthetic long gamma play.
Long gamma. Sounds fancy. What is it?
Essentially, it's a strategy designed to profit from big price swings, either direction up or down. You're not betting on direction, you're betting on movement.
Okay, betting on volatility itself.
Exactly. And the implied volatility for Li Auto, the market's guess about future price swings, is likely to stay elevated. You've got the i6 launch coming up, the full VLA rollout, those Q3 delivery numbers everyone will be watching, all happening during this intense price war.
So lots of potential catalysts for big moves.
Fertile ground for significant price swings, yes. So the trade idea is to construct a long straddle, maybe with a slight out-of-the-money bias, target maybe the November or December expiration.
Long straddle.
Yeah.
Remind us how that works.
You simultaneously buy both a call option and a put option. Same expiration date, usually the same strike price, although here I'm suggesting slightly out of the money strikes. For example, maybe buy the $25 strike calls and the $20 strike puts for November.
So you cover both upside and downside potential.
Right. You're betting on a substantial move away from the current price zone between $20 and $25.
Why does this make sense for Li Auto right now?
Well, first, as we said, numerous upcoming catalysts. Any one of them could spark a big move. Second, the AI and chip developments are strong, long-term bullish catalysts that could get priced in very quickly if they show progress.
Okay.
And third, that immediate post-earnings rebound, even with the soft guidance, it suggests a market that's kind of eager for any reason to be optimistic, or maybe just prone to strong reactions. So we're betting on big moves, not direction. You could potentially profit whether the i6 is a smash hit or a total flop, as long as the market reacts strongly.
What's the risk?
The risk is the stock just snake flatlines. Goes nowhere significant. Then both the call and the put options expire worthless, and you lose the premium you paid for them. But in this dynamic, volatile market for Li Auto, betting on volatility itself looks compelling.
Interesting idea. A bet on continued drama, essentially.
You could put it that way.
Okay, so just to summarize then, Li Auto's Q2 call showed a company definitely facing headwinds, price wars, transition pains, but they're responding with solid operational efficiency, especially on margins, a really bold pivot to BEVs, and these aggressive, pretty ambitious investments in AI and their own chips.
Exactly. And while the headline financials missed and that Q3 guidance was certainly cautious, the market's reaction suggests maybe a degree of underlying confidence in the long-term vision.
Right. The success of this whole multi-year arc they're planning, from hybrid to BEV, layering on more software and compute, it really hinges entirely on their ability to execute these ambitious plans quickly and effectively.
That's the bottom line. The ultimate question for investors is, can Li Auto truly accelerate its pace of iteration in product and technology, like they claim they can, to actually gain a stronger lead by 2026? That's what they're aiming for.
A crucial question indeed. Well, thank you for joining us for this deep dive into Li Auto's Q2 earnings. And remember, everyone, this information is purely for educational purposes.
Definitely not financial advice.
Please don't take it as financial advice. We always welcome your feedback and insights on today's discussion, though. Join us next time for another deep dive.